Hi, and welcome to our weekly Morton Brown Family Wealth Market Update. I'm Dennis Morton here with Cody Demmel. How you doing, Cody?
Good. How are you?
Great. So we're here in the last week of summer. So it's right before Labor Day, the week of August 31st. And I want to report on Zoom. Everyone knows this is our way of life, speaking virtually, and Zoom Communications is a stock that people have been watching all throughout this year. The company just reported earnings this week and just blew out their quarter. I mean, their revenues were up, I think, over 5 times what they were a year ago. The stock, they had expected to make about $1.7 billion this year. Now they're expecting $2.3 billion. The stock was up over 40% on Tuesday alone. I think it's now trading at 550 times its earnings, which expensive 20 or 25 times earnings. So, just an extraordinary thing. Cody, what do you think about where a stock like Zoom is right now?
Yeah, I think it's just obviously people piling into what they think is the future. But going forward, there's going to be other companies that jump into this narrative. So it's going to be interesting to see how diluted the market gets going forward. And just 550 times earnings for Zoom is crazy.
Yeah, I mean, you're in a space where you already have Google and Microsoft are playing in there, not to mention GoToMeeting and all these other competitors. So it's not like they don't have a moat around this, as Warren Buffett would say. There's no moat around this business. We'll pull up that one chart we wanted to point out today. So this comes back to story investing. And I'm a little bit allergic to story investing for this reason. So the story is virtual meetings and conference systems, and the ability to do what Zoom does is the way of the future, right? The longer this pandemic goes, the more people are working from home. This is the story. So wouldn't it make sense to invest in a company like Zoom that's going to be out in front on that? This is a chart of from 1996 to 2006 of world internet users and then the NASDAQ index. So if I told you on January 1st, 1996, that your purple line there, the number of world internet users would march forward over the next 10 years and multiply and multiply. And the companies that are going to help make that happen, you could invest in right here. Here's where the euphoria kicks in. By 1999 and 2000, that's when we had the dot-com bubble, and then it burst. And there was no bubble bursting in internet users. That's kept marching on. The story was intact, but it didn't make the stocks worth it at each stage. So at some point, valuation matters. It doesn't matter for Zoom right now. It doesn't matter for a lot of names. But be cautious about your story. Can be absolutely true in the long term. You could be dead right that the internet's going to take over, or virtual meetings are going to be the way of the future, but it doesn't necessarily mean it's a good stock. So that brings up the question of, okay, what can you buy? You can chase after growth, or you can look at value investing. We've talked about the difference between growth and value before. Cody, we have found an article from Equius Partners about a historic opportunity for investors. Tell us a little about this one.
Yeah, so this was a great article that you brought forward. It goes over the value, especially small value stocks compared to the S&P, so the U.S. market in whole, over from 1926 to present. I just thought it was really interesting because obviously everyone knows recently growth outperformed value, and people are not feeling the greatest towards value positions. I just think it's really important to point out that over the long haul, value actually outperforms the U.S. market in whole. And I mean, with all-time valuations, I think it's very important to look at different value plays going forward.
I love how it points out here that the periods when growth wins is typically at the end of a cycle, like, the 2 years ending in 2000, 2 years ending in June 1999, 1929, 2020. That's those periods of outperformance that he refers to it as end period bias. Like, once you start seeing things going parabolic on the growth side, it's usually late in the cycle. And this is where the Warren Buffetts of the world, this is where the great value investors have made their money, because they're not getting caught up in these short periods of outperformance. They're kind of hanging in for the long run. So the good news, if you're an investor, is, and we're hearing this all the time, I don't want to put my money to work in the market. That's fine. We understand that. It feels very pricey right now. But when you kind of crack it open, there are some, deep value places where there are still opportunities. And we hear that from managers all the time. There are still places where there are good companies, growing earnings, good cash flows, and there is opportunity. So the Zooms of the world aren't the only story.
I think that's very important to point out. And then another thing from this article that I thought was really important, and you just touched on it. So from 1995 to 2007, the average annual return for a small value company was around 20% annually. And for the US stock market as a whole, it was around 12%. So an average of 8% a year outperformance from small value stocks. And that includes 95 to 99, where obviously all the market upturn was in growth. And then you can see what happens over the longer haul. I'm not saying that that's what's going to happen going forward, but I think it's really important to point out that you can have vast outperformance from value or growth in a period, but over the long haul, it's important to be diversified throughout the portfolio.
Yeah, and the whole point of a value stock is you're paying a lower price for those earnings, and eventually the price that you pay matters to get in. So we should expect that premium for buying lower priced shares relative to earnings. But the market can remain irrational longer than we can remain solvent, so don't bet against it. There's continuing to be that tension, but I thought this was a good, put the growth outperformance in good context.
Yep.
All right, so now we come to our letdown of the week, which is the story on debt relative to GDP. So we've been talking before about how debt levels were getting up into World War II era spikes somewhat recently, and just recently reported that our debt will exceed annual GDP this year, which is an incredible phenomenon. Cody, where does that put us relative to other countries in the world right now?
So that is a scary thing to think about, because it's the first time since World War II that the debt is going to exceed our GDP. But this puts us at the third highest debt to GDP ratio in the world, and we're only behind Japan and Italy.
Yeah, and for those of you keeping score at home, being compared to Japan's economy is not a great comparison. I mean, we're still talking about being 30 years on from the last time they had a market high in Japan, and it's just. So they've been, there's demographic issues there, and this is pandemic driven. Theirs is much more systemic, but, not a great place to be. But it's an interesting parallel back to the World War II environment, especially when we talk about how do you navigate this coming out. So we're coming out of World War II. Every major industrial economy in the world was leveled. So you had Great Britain and Germany and Japan, they were all feeling the structural the destruction that the war took on their infrastructure. The United States kind of stood alone, being largely intact, and could benefit from, we could kind of bring soldiers home, get the economy back moving, and our reindustrialization, while everyone else was busy with the Marshall Plan and rebuilding, we got to race ahead for the next 15 or 20 years before anyone started catching up. But in this case, we are, and you see those debt levels plummeting over the 50s and 60s. But then relative to GDP. But now we're in a situation where we've been hit as bad, if not worse, from the economic impact and the health impact of COVID, and the playing field is a lot more level. We don't have that competitive advantage, so to speak, that we did in the late 40s and early 50s.
Yep. I think that's really important to point out, especially think about the stock market and not just the kind of economy in whole, but our valuations are so much higher than international valuations. And again, I mean, that's just another important reason to be diversified throughout our portfolios. So
if I can put a silver lining on this, I do think that one of the things that we have going for us, and one of the reasons why the US stock market has done very well over the last decade or so, is we have a lot of companies that are competing very well in the global economy. So that innovation, I think we talk about this being a really concentrated period of creative destruction. And I think, there's a lot of interesting things that could come out of this, the way we work, the way we live. And I think there could be a very positive story from the innovative perspective. But yeah, the current debt levels are just, a level we haven't seen in a long time.
Yeah. All
right. So, Cody, just a couple of quick comments. With you being engaged and not having any kids yet, I'm going to report from the future. We have 4 now. The school started this week for 3 of them. They're supposed to be in school, but they're at home now because of a water main break or something, and that kept them home a little bit longer. But just an observation. We talk about the impact of childhood experiences on the way we interact with money and approach life decisions and everything else. I still hear from my kids these days, everything's framed in the context of before the virus was here and when the virus is gone. Like they're just, even my 4-year-old, she'll start sentences by saying, when the virus is gone, we're going to do blank, blank, blank. It's a special shout out to the families and the parents and grandparents and the kind of neighborhoods that are figuring out how to make this work. I do think that this is going to be one of those other distortions that as we try to go back to school, back to work, all of those things, we figure out just kind of how we're all going to make it work, because it's not going to be the same as it was even back in March and April. So I wish everyone the best as we can adjust to that part of the new normal. But here's to thinking about after the virus before too long. So
yeah.
All right. Great. Hope everyone has a great week. Enjoy Labor Day weekend. Look forward to catching up with you next week. Take care.